What is up, fellow financial YouTubers? This is Dave here, and in this video I want to show you how we can level up our investment strategies by using different market weights in order to allocate how much cash is being invested into what. Now, you may have heard me talking, or you may have heard the term weights, but what are they and how are they used? Well, if we look over into Investopedia, weighted or weights, it's a description of adjustments to a figure to reflect different proportions or weights of components that make up that figure. A weighted average, for example, takes into account the proportional relevance to each component instead of measuring each individual component individually. Yeah, so in essence, all of that is just saying that weights are different stock indicators that we can use in order to allocate funds into stocks. And it's all based on ratios. So now, we can use pretty much any technical indicator we want in order to find our weights. But typically, we want to use indicators that are fairly consistent and not changing, minute by minute or day by day. Some of these indicators for me include the 52-week average price, the market cap, dividend yield, or you can even use a simple equal weight. But doing an equal weighting is more amateurish. So while all that is well and good, you might be asking yourself now is how exactly do we use those indicators to provide a weight? Well, the good news is that it's extremely easy. Like I mentioned earlier, it's all we have to do is find the ratio of the individual stocks indicator to the total. It's as easy as doing some Excel or math, one of the two. So let's go ahead and bring up Excel, and we'll go ahead and just do a sample portfolio, and then we'll start calculating some weights, and I can kind of show you, walk you through on how to do this. So first off, let's go ahead and give our table here some headers of what we want to use as weights, as well as what weight will be for each. You'll see. Of course, we'll need our ticker symbol. So let's go ahead and put that here, ticker symbol. And then popular weights, let's go with price average, price weights, market cap, see weight, yield, and then yield weight. All right, so now we have a couple of headers here for our title. Make sure we can see everything. Okay, this, and this. These will all be percentages. All right, so a couple ticker symbols. Let's go with the financial sector. We'll do V for Visa, JPM, JP Morgan, WFC, that's Wells Fargo, if I'm not mistaken. So we'll select all of these and we'll go to data and stocks. Okay, perfect. We actually need to move this. Okay, whatever. Market cap, yield. Okay. Yeah, I forgot with the data connector, it puts it uh, column by column. So we just need to do this. All right, so price average for Visa, we want to take a 52-week price average. So that's going to be price high plus A2 dot 52 week low divided by 2. And there we go. All right, so that is actually the average of the high price and then the low price. We just divide it by 2 since we only have 2 values here. The market cap of Visa is $1 billion. Actually, a little over a billion. 464 billion. All right, so unfortunately with Excel, it doesn't have a connector for dividend yield, which is unfortunate. But we can go over to FinViz over here, and we can pull it up through FinViz. So you can see that the yield for Visa is 0.69%, 0.69%. And let's go ahead and copy these. JPM is 2.53. Visa was 0.69, right? Yeah. Okay. The next one is WFC, Wells Fargo. And that one is 1.67. And you can see I'm getting it from right here, the dividend percent. All right, so price weight. These are actually pretty easy to do. You can do something easy such as like this divided by sum of these. So, you can do that. Or what I want to do is I want to convert this to a table. So let's do that. My table has headers. So what we do is we do equals, open bracket, @ sign, another open bracket, price average divided by sum, open bracket, price average. What am I forgetting here? Close bracket, close bracket. And then these is do. All right, so what is this saying? This is saying at this row, the column price average divided by the sum of everything in this column that has the header price average. So, and you can see it auto filled these out. And if we total these up, 54 plus 36 is 90 plus 10 is 100%. All right, so that's the price weight. And we'll basically do the same here. But instead of the price, we want to do market cap. So cap, and it's going to be percentage. All right, so we have 41, 42, and 18. That looks a little weird. This one is going to be a yield weight. Just copy that. And then we go to yield. Yield. Percentage. Alrighty, so let's go ahead and test our table here. We want a total row. And this one will be sum. Sum. All percentages. All right, so you can see 54, 36, and 10 is 100%. And 41 plus 42 plus 18. So that's 101. Never said Excel was accurate. So in a case like this, if we're doing a market cap, we just need to take one away. So let's do 17 here. All right, and then this one, 4, 4, that's 10, 5, 8, 9, 10, so that's 100%. That one is accurate. So you can kind of see by these different weights here that depending on how much money is allocated into this portfolio or into this slice, these are the percentages of the funds to the actual stocks. So this is actually a more professional way of doing allocations when you're creating your various slices. If you want as well, you can actually combine this. So let's say this is a table finance, fin, we'll say. And we can come over here and we can do like an average price. There we go. And then same thing, average. And then yield, this one would be average yield, percentage. So what you can do is you can take various tables and you can then in your main portfolio, you can also set up weights for these sectors. You can do that as well. So yeah, that's pretty much it. I hope this was definitely useful for you folks. If it was, go ahead and hit me up with a like. And if you haven't already, go ahead and subscribe to the channel. So peace out.